Okay, this is the order flows trade analysis for June 21st, 2016. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, in this presentation, I use the order flows trader, the order flows delta scalper, the order flows price rejector. The order flows trader is the main footprint chart that you're going to see. And there are two additional indicators, the delta scalper and the price rejector, which just help you to read the order flow. It's not necessary to have the delta scalper or the price rejector. It just makes your life a lot easier. And it runs on the NinjaTrader trading platform. NinjaTrader can be downloaded for free, and they have a paid version, which is good to use if you're going to have a trading account with NinjaTrader brokerage. You get very good and low commission rates. Okay, so today was Tuesday, June 21st, and it was the first day of two appearances this week of Janet Yellen testifying in Washington on, this is a semi-annual event, and so you also have the Brexit vote this week, so I kind of expected the market to be pretty quiet, and unless something was going to really tickle me fancy, then I wasn't really expecting to trade much. So, we had made our high at just before 6:30 this morning. This is on a 10-range Emini chart. There was this stacked buying imbalance here right on the high. This is what a stop triggered imbalance looks like. You got all these zeros. The market pops up. The order that gets triggered, works its way through, and then the market immediately comes off. Now you could see it here, right? Where's the follow through? You have this buying imbalance. Where's the follow through? That's why. I'm usually not keen on taking buying imbalances near highs. I prefer to take them near lows, as you'll see later. Just because, when you're taking out the highs, sometimes you're going to get, stops up there. They're going to be triggered. But when you're taking out highs, you do expect to see, buying imbalances, but you expect to see the follow through. When you see something like this with all these zeros, that leads me to believe that there's a stop being triggered, and the fact that we couldn't follow through, came in immediately, filled it in, and then proceeded to trade lowers again. This tells me it's a weak high. You have a divergence up here, so you got the negative delta, although it's small, -11. It's still a divergence nevertheless. It's not a ratio that I like. It was close. It was 0.78. I prefer something below 0.7. But nevertheless, it was just. To me, it just looked like a weak high. So, we came into the cash session at 8:30. We're open up here, and we're just sort of hanging around still our opening price for the session around this 2079 area. And, Janet Yellen was speaking at 9 o'clock. I took a trade here. Our low for the day was this red line here, 2074 and a quarter. And I get a buying imbalance. It's just after the cash open, 10 minutes after the cash open, got a buying imbalance, right off our low. I felt it was going to give me a low risk trade. My worst case scenario stop would be the low. But still I'm looking for a move, up into the 84, 85 area, optimistically. And, I had enough time, it was ahead of Janet Yellen's speech. So, it's 8:40. I wanted to see if I could get something out of it. And I got long. Just on the other side of this stacked buying imbalance, I got long at 78.5, which is, just on the other side of the zone. We're putting in some good volume here. We had a buying imbalance here. This 25.44, for a while was a buying imbalance of, 1,500, 1,600, kept growing. Later, though, we came in and sold off. There was a big order. It went through the market right here. You can see it just pushed it lower. You got imbalance, imbalance, imbalance. Not much volume, being traded on the offer side. And, as luck would have it, we came down to my stop price, took it out by a tick, and then rallied back up. So I took a loss. I took it on the chin. That's often again, I hate to say there's luck involved in trading, but it trades right down to my stop price, turns around, comes back up, but then it just hangs around this area here. Honestly, had I had my stop a little bit lower, and then we trade back up here, I'm not sure if I really would have gotten out up here to scratch it. When I see this volume start trading here, I'm really expecting it to go higher. Now I'm thinking the move's going to happen. We come down here, sort of work our way through this order that was being executed to push it down 2 points, 2.5 points, and then I start to see it come back up. I start to see some good volume being traded on the offer, some strong buying, and I probably would have held it. I don't think I would have been looking to scratch it, after taking 2 points of heat, 2.5 points of heat. When it comes back up to my entry price, I'm starting to feel good that now the market's going to go. I'm not looking to scratch it at this point. And then the selling comes in again. Boom, you see a strong negative delta, 2,900. You see some good volume being traded here, 3,000, 5,000. And again, what you saw in this bar sort of again happens in this bar, and we get that push back down to around the 76 level. So, even though my stop is at 76, had it been, say, at 75, when we're trading up here, at best, I would have been able to scratch it, I think, or maybe, probably taking a loss somewhere around 77 or even 76. So, even in hindsight, I don't think I really would have done that much better, maybe a couple ticks to a point better on this trade. It happens. And then Janet Yellen started speaking, and, we just really went sideways over, the next, I'll say the rest of the day, but it felt like the rest of the day. Honestly, I didn't stick around, the rest of the day. But, we came into the low. This is the price rejector kicking off right here, on the low. We rallied up a bit from it. We rallied, 77 area all the way up to the, 82, 83 area. And then, we're just hanging around this opening price. When you're hanging around your opening price for the session, it just tells you there's really the only participants are the day time frame traders, the short-term traders, not the long-term traders. The long-term traders are what's going to cause the moves to happen. It's going to cause, it's going to be their new positions, they're initiating new position that cause the market to move either up or down. But when you're just sort of, range trading in a tight range, especially hanging around your opening price, to me, that's a sign of, a market that's got not much direction, that we're just trading in a range. You can see your volume profile here. You just click here, we get your volume profile up for the day. And, you just have your sort of D-shaped normal distribution going on there. Later, after 1 o'clock, 2 o'clock, we came up to the high. Yeah, you got within a tick of it, couldn't hit it, couldn't take it out. Again, there's no ratio there. And then we're just sort of drifting back down again towards the opening price. And we close almost, right at the same price we opened. Asia, right now, as I record this, it's 10:30 at night in Chicago. We're a little bit higher from close yesterday, but, the market was pretty quiet. Janet Yellen is still speaking again tomorrow. Honestly, I think the Fed is very dovish right now, and, June, June has passed, but, July is the question. There's some people trying to talk up a September rate hike. Honestly, I don't see how they can do any rate hikes, with the way the economy is as bad as it is. And the Dow was up marginally, I think, 0.1%, which is basically unchanged. Gold fell about $20. So, dollar index was a little bit firmer. So, overall, it was a very quiet day with not a lot going on. And I kind of expect again tomorrow, Wednesday, the same thing. Obviously, on Thursday, you have the Brexit vote, but it closes, it's going to close. I think the polls close at 10 p.m. London time, which is, well after the London markets, the European markets close. And, it's late afternoon in the U.S. So, but obviously the results probably won't come out for a while. So, expect, I don't want to say a calm market, but, there's going to be a lot of positioning, so to speak, after the vote. It keeps changing. Honestly, I think my feeling is, it's better for Britain to leave the EU, but, I'm not British. A lot of my British friends, that they don't like being in the EU. And, So we'll see what's going to happen. It's kind of a very historic moment in that sense with the vote, and we'll see. I think the market's going to be very volatile even after it. Even because even after the vote, there's a lot of things that can happen as well. So there's going to give you a lot of opportunities in the market. Okay, but just real quick, I want to talk about the bond market real quick. The bonds, you got to be careful trading it when when Janet Yellen or any senior member especially voting member from the FOMC is talking, because it's going to move pretty quick, and oftentimes it can move 4 or 5 ticks on you, I'll say in a blink of an eye, but it can move pretty quick. Nevertheless, I tend not to trade bonds when it's the interest rate when someone from the Fed is speaking. But honestly, there really wasn't much as far as the order flows goes today. And you had your low here at 627, nothing in there. You still had the negative delta. I didn't have a divergence. You had the ratio afterwards is 36.5, but I would need the ratio there, sorry, the divergence to take this trade. But it would have been nice, but it just didn't happen. But we got up to this high here. I remember earlier, just after Janet Yellen started speaking, and I remember at the time you had a couple things. You had for a while you had a divergence forming, you had a ratio forming, you had a lot of things, and really it was in this bar here. This bar, it kind of ended up strange. It was a doji. You got a buying imbalance here and a selling imbalance right at the same level. And it's just sort of indicating, a market, what's it going to do? We pop higher by a couple ticks. For a while we had a ratio balance low. We had a divergence. You can still see it ended up with still a small negative delta. But, I was really interested in possibly getting short there. But we took out the high by 3 ticks. Here you have the divergence. Here is a ratio. It's very close to my ratio setting that I like to use. If you go to the settings, you can see my settings here. I use 0.69. This one came out at 0.76, so it's very close. If I use 0.8, it would have been blue, but nevertheless, it's 0.76. And but again, I'm not going to take a trade in the bonds when Janet Yellen is speaking. But this is one of those. It was just borderline. It did come off a bit. Again, I'm not trying to say, yeah, I should have taken it, because it didn't meet my requirements, and I'm not going to take it when someone from the Fed is speaking like that. But I'm just sort of showing you, how you get these things. You got to take it in context of what's happening in the market. I mean, yeah, it's a borderline trade at best, but someone from the Fed is speaking. Do you want to take it or not? No. Especially if it's borderline and the Fed is speaking, I prefer not to. We came off and we just, we came down into the lows, hit your lows just ahead of the cash close. You have a divergence. You don't have a ratio. It's 14. And, what can you do? There just wasn't much going on in the bonds this morning to really give you any good trading opportunities. Okay, the other market I want to talk about today is the SIMEX Nikkei. It's open right now, actually. It opens at 6:45 Chicago time, and it's a good market to trade. People talk about trading Osaka Nikkei, the mini Nikkei. Yeah, that's great, but SIMEX is one. The SGX, that's SIMEX. The SGX Nikkei is a great contract to trade. I know people that have been trading it for years. They literally made millions of dollars on it, and I'm not bullshitting you there. And I spent 10 years in Singapore. Trust me on that. There's people that set up hedge funds just to trade SIMEX Nikkei against Osaka Nikkei and outright and against S&Ps. But it's also it's a market. And I often say order flow works on pretty much every futures market. And even the indicators. That the additional ones, the price rejector, the delta scalper, also work. So here's your open. It opens 6:45. It's a little bit early for, I'll say, if you're in Singapore, it's 7:45. But I don't take any signals right on the open, and cash opens here at at 7, which is 8 o'clock there. I won't say cash, but Japan opens. It's 9 o'clock Japan time. So anyway, futures open a little bit earlier. I'm still looking at the same thing. So, we came in here, we have this, at 7:12 p.m. You got the price rejector, you got a ratio. Okay, is this going to be our low? Yeah, it can be, but you got to have, again, you got to have a tight stop. Now it's trading, it trades in, it's a Nikkei, so it trades in, it trades in nickels. So like, 16,000, 16,005, 16,010, like that. And, every nickel is 2,500 yen, so it's around 20, depending on what the exchange rate is. I think it's around 22 bucks a tick. Okay, so this one, you're looking for a low right now. That's what the price rejector is trying to do. It's trying to determine, is this going to be the low? Well, no. Honestly, it didn't hold. We started to come up, boom, came off, made a new low by a few ticks. What is that? 1, 2, 3, 4 ticks. You're just sort of hanging around that low. Come and start trading lower. You got a ratio bounce low here. Okay, but you still got the negative delta. And then, here you come in, you got price rejector again. So again, it's probably saying, okay, hey, maybe, you're getting a second chance for a low. It's holding this time. It's holding. It's got a negative delta, but, it's small. It's 31. We do bounce up a bit, sort of come in, this low here. This is what, 945, which is the same price as before. But then, we take it out, we just sort of go sideways. We don't really put in a big rally. I mean, yeah, you could make the argument, this was a rally from 960 up to 620, 630, which is, a decent move. That's a $250 move on a one lot. And, we came back down. You have this ratio here, but still, it's nothing. It's just a ratio. You still got a small delta. Then you get here, you got the delta scalper kicking off, a buy signal here. It's backed up with the ratio just, a couple bars afterwards. So, you're getting along anywhere in between around this 15,960 level. 970 would be aggressive. And we trade, all the way up, up to 20. You get the price rejector kicking off right here. It's close to a ratio. We got a single print. So, again, it's giving you a couple trades, a couple decent trades. This move here is, $200 or $300. This move here is $200 or $300. This early one is a loss, but, it's a smaller loss. It's about $150. But, the same things that I'm looking at in whether it's bonds, whether it's S&Ps, it's the same things I'm looking at in Nikkei, in corn, in any other market. So, I'll show you the corn. Corn had some nice moves in it today. Corn is normally a boring market to trade, but it's a commodity market. And commodities hold supply and demand very well. Okay, I shouldn't say it holds supply and demand really well. I mean, the proper way to say it is it follows supply and demand really well because it's a product that people are buying. The big commercials will take delivery or make delivery, so it's not something that's cash settled that you could just do some simple bookkeeping at the end of the month. And corn had made a very dramatic move this morning, and honestly, usually it trades in a very tight range here. You can see for the most of the session, overnight session, it was trading in basically a 3 or 4 cent range. Boom, we get a big sell-off, which is not something you get like this. This is even before the normal close, the electronic close. Then the main session opens. You have a ratio here, but you got a very strong negative delta. I mean, you don't want to be taking a buy there. Here you have a divergence. You got a very small delta, 13. You don't have a ratio that you like to see, and we're just continuing down. this is at the cash open. This is at the futures open, the old floor opening time. Here you have. You got this big selling bounce. This is a stop being triggered. You can see it, boom, it runs out, bounces back up, then the selling comes in, continues down. Now, I talk about this setup, the 3 in a row, 3 ratios in a row that I like, but I don't like taking them right as you're making new lows, new lows, new lows. I'd rather have it, trading a little bit higher, coming into a low rather than pounding 3 lows, especially in a market that's already sold off, 20 cents. Corn has daily price limits. I think they're 40 cents now or 30 cents. So, I don't want to be taking a sell when we've already moved 20 cents. I'd rather be taking a sell when we've moved 5 cents. But, this down here, this I found interesting. You got this ratio 169. You don't have a divergence, but you got a nice ratio. Again, it was just one of those things. I said corn is just was pretty chaotic, but I'm looking for same things. Ideally I'd love to have a ratio, a divergence here with this ratio. You get the positive delta. Now it's starting to bounce up off this low. You could see, negative delta, boom, negative delta. This negative delta though is still a holdover from this big sell and imbalance here. Obviously you got minus 679, so you're going to have close to a strong negative delta, but we start to rally off of it, all positive deltas. You got this selling imbalance right off the low. I'd prefer not to take that just because, I'd rather take a buying imbalance. But we're just sort of humming around this low. Again, stringing it together, some positive deltas. Come down in here. You got the price rejected, but still you got a negative delta. Come down into the lows again. Boom, boom, boom. Going down, down, down. Now, here, okay, we got, again, the selling imbalance at the low. Right off the low into the new low. Come off, and there's no ratios there telling you to be, there's no reason to be telling you to be buying. You come up here, you get this swing high here. To me, I felt this was a nice sell. Yeah, you have the stacked buying imbalance off the low, but when I come in here and I start seeing, ratio, it's, these are ratio bounds low, so it's telling you there's some volume up in here. It's for me. I think it's a good opportunity to be getting short somewhere over here. Even though it's still got positive deltas, I do know that there's these types of ratios are telling me that there's some volume on the offers up here, stopping the market from going any higher. This to me is telling me that, hey, there's still selling pressure in the market. There's still people got supply they want to get off their hands, and they're waiting for the bounce up to show it. They're not coming in and plowing through the market. They're there. Okay, let the market come to me. I'm working my offers. Boom. They're getting some. But this is the power of the ratios. It's telling you that, hey, there's some stopping volume there. And then we come off from this area. Even these two bars really stand out. This one is a bonus. So I mean, you could really be getting shorts anywhere around between $4, 401. And we end up at the day down around 396 during the Asian session. Right now we're trading 398. So I mean, it wasn't, it's not like a 10-cent move. Honestly, if there was something, where was it, that started the move up here. Even up here, this is at 333. You see it again here. You see the stopping volume here. Again, I'm not saying that that's going to kick off the the big sell-off. It just really came in. Honestly, I didn't even see what the news was. I sort of forgot about this until I'm recording this video. But you're getting, just you see the deltas, all massive negative deltas. On the way down, and there really wasn't any solid buying signal. Here, yeah, you have this ratio, but I'd prefer to have a divergence in there. You're not getting it. And then the setup that you saw later, just around 12 o'clock, is still bearish for that market. So to me, I see it like this. It's going to give me a low risk trade. I'm not going to be risking more than a cent, a penny or two on this trade, and it's going to give you probably 2 or 3 or 4 cents opportunity. So I mean, yeah, trading corn is not as glamorous as trading crude oil or bonds or E-minis, but you know what, these grain contracts are great for trading. Most commodities are. Okay, so thanks for watching this video, and to learn more about trading software used in this presentation and how you can profit from order flow trading, visit my website, www.orderflows.com. Send me an email. My contact's on there, if you're interested. And, we have a trading room, which is, educational. I don't say it's a trading room. I'd maybe take 1 or 2 trades, 3 or 4 trades a day in the room. It's hard sometimes because I'm trying to explain a lot of things to traders in there. and at the same time I'm trying to follow a couple markets. Sometimes I do miss a good entry. It's not a trading room where I'm sitting there calling out trades left and right. Not at all. It's just a room where I'm there talking about the order flow, what I'm seeing, and so you can learn. I mean, that's the whole point of it. I also have a 15-hour video course if you're interested, and the software, and if you're interested, we got the software, the course, the trading room. It's all bundled together. So it's I'm not charging an arm and a leg for it either. So check out my website, www.orderflows.com, and hopefully you can learn something off of this video today. So thanks, and see you on the inside. Bye bye.